In a move that has shocked Wall Street and thrilled retail investors, Opendoor Technologies stock has skyrocketed an astonishing 600% within just a few days in 2025. A company once struggling to stay afloat in the volatile real estate tech space is now making headlines as one of the most explosive comebacks in recent financial history. But what caused this meteoric rise? Is it real momentum or another meme stock mirage? In today's video, we break down the real reasons behind Opendoor's historic rally and what this could mean for the market, the real estate industry, and your portfolio. Opendoor, a company known for disrupting traditional home buying with its iBuying model, was almost written off after a brutal 2022 to 2023 bear market. Rising interest rates, declining home sales, and mounting operating losses had pushed Opendoor into what many considered a survival phase. Analysts were skeptical, and short sellers circled like sharks. But in 2025, something changed. In just a matter of days, the stock surged by 600%, catching even the most seasoned investors off guard. Social media exploded with screenshots of 10x gains, Reddit forums lit up, and CNBC scrambled to cover the unexpected breakout. So what fueled this explosive run? It wasn't just hype, there's a powerful story underneath. First, Opendoor announced a groundbreaking partnership with one of the largest mortgage lenders in the US, allowing seamless integration of instant home offers with low-rate financing. This deal streamlined the user experience, making Opendoor a one-stop shop for buyers and sellers. But even more importantly, the company revealed a massive leap in profitability, posting its first major net profit in years. That profit didn't come from cutting corners, it came from better technology, smarter pricing algorithms, and a shift toward high-demand metro areas. Then came the bombshell. Opendoor's AI-powered pricing engine, developed in-house, began outperforming human appraisers in accuracy. The announcement sent ripples through the fintech and real estate industries. Investors started to see Opendoor not just as a real estate disruptor, but as a serious AI tech company with a scalable edge. Add in a surprise endorsement from a major Wall Street fund, which revealed a heavy position in the stock during an SEC filing, and retail momentum went into overdrive. But that's not all. One of the biggest drivers of the price surge was an unexpected short squeeze. Opendoor was heavily shorted coming into the year. When the stock began to climb, short sellers were forced to buy shares to cover their positions, fueling an even sharper rally. This GameStop-style squeeze ignited a frenzy across social media platforms like X, TikTok, and YouTube, where influencers called it the real estate rocket. Thousands of new retail traders jumped in, hoping to ride the momentum. Suddenly, Opendoor wasn't just a stock, it was a movement. While the price action has been wild, some analysts are urging caution. A 600% gain in days is rare, and history has shown that what goes up that fast can come down just as quickly. However, others argue that this rally may have strong legs. Unlike other pump-and-dump plays, Opendoor now has tangible improvements in fundamentals, real profits, and scalable AI-driven tech. It's no longer the speculative iBuyer of 2021. It's a restructured, revenue-positive, tech-first powerhouse. As of now, Opendoor's market cap has more than quadrupled, and it's being talked about as a potential acquisition target for major tech players looking to enter real estate. Imagine Apple, Google, or even Amazon bundling real estate with their home automation or finance arms. Opendoor's tech stack is suddenly very attractive, and speculation is swirling. The retail investor community is watching closely. Some have made life-changing profits in just a few days. Others are still holding, believing this is just the beginning. Meanwhile, financial institutions are reportedly adjusting their algorithms to account for Opendoor's new volatility, and brokerages are raising margin requirements to protect against further shocks. One thing is clear: Opendoor's 2025 run isn't just about one company. It's a signal that the markets are shifting. AI integration, direct-to-consumer real estate, and fintech disruption are no longer buzzwords. They're realities. This moment could mark the beginning of a broader transformation in how homes are bought, sold, and valued in the modern economy. So, should you invest now? That's a personal decision. But what's undeniable is that Opendoor's 600% surge has lit a fire under the entire real estate tech sector. Whether you're an investor, a tech enthusiast, or just someone who dreams of selling a home with a click, This story is worth watching. Because in 2025, the door hasn't just opened, it's been kicked wide open, and the whole market is rushing through.